Thanks so much for tuning into this conversation with Titan. The standalone revenue growth, 33 odd percent, at 3.4% to be precise, broad-based across segments, and leads to a 4-year CAGR of 20%. That's impressive by any stretch of imagination. The question is, as some of the notes are saying, one, well, some of it could be priced in, and two, are there some hiccups or would the growth story continue unabated? Mr. CK Venkataraman joins in right now to talk about how the quarter and the year went by, and how does he feel at the start of this year about what FY24 holds in store. Good evening, Mr. Venkataraman. Thanks so much for taking the time out. Congrats on a good Q4. Congrats on last strong 4 quarters as well. What stood out for you in Q4 before we talk about the year ahead?
It's the continuation of the momentum in terms of sales growth, Neeraj, and across all businesses, and including the international markets where we are a recent entrant. And in their own spaces, each of the divisions did exceedingly well and established all the right sort of levers of growth for the next year, next few years. And very, very satisfactory from that point of view. And I'm also very glad that you yourself spoke about not just the quarter, but the last 4 quarters and the last 4 years of CAGR. And in fact, I was, sort of wanting to speak in that context in any case later, but it's good that you gave me that opening.
No, so let's bring that up, because it's no mean feat to do that at that base, to do it for 4 consistent years. And I've heard you say in our previous interactions that you actually view this growth trajectory as something that could last not for the next 1-2 years, but sort of a decadal story as well. So does this reinforce your belief on both the longevity and the pace of growth?
Very much. Actually, in our last investor meet in May of 2022, we had shared for most of the businesses 5-year kind of dreams. So 2.5x for jewellery, 10,000 crores for FY26 for watches, and so on. A big growth in international for Taneira, bags, and all that. And that to me is, the game that we are playing. And being a runner, I would sort of liken it to a marathon. And if I were to take 5 years and 4 quarters, we're talking about 20 kind of race parts. And if I were to take a full marathon, it's 42 kilometers. So roughly 2 kilometers per quarter. And as a person who sort of takes a pause, at a hydration point, which often comes once in 2 kilometers. And then the hydration point is a time to actually pause, reflect, relax, drink some water, sort of pat yourself on the back, pat the people around you, good show guys kind of thing, and get back into the next, 2 kilometers or whatever, right? Now, at that time, you're looking not so much at what just the preceding 2 kilometers were, as opposed to how on course are you for the 42. What I mean by that is that since there are 20 segments of 2 kilometers each, and let's say in a year particularly, there are 4 such 2 kilometers each. So those 8 kilometers together, how well have you done? And are you on course towards your timing target for, let's say, 42, versus this particular 2 was not as good as the last 2 sequential. So like Q3 was damn good, for example, could be. And Q4 was not as good as Q3. So the questions could be certainly from the analysts and media and all that. Q4 wasn't as good as Q3. But to me, the 4 quarters together, how good they were. They were fantastic. I mean, apart from the Q4 itself being pretty good, but the overall Q4 being fantastic. And like you said, the 4-year CAGR being even more so. That is the way I look at it. Even if I don't look at a decade, even if I just were to look at 5 years and FY27 as the goal, very, very excited, and all the, without repeating the same stuff which I would do so, all the enabling conditions are very much there. The hiccups come and go in a month, whether it is gold rate or overall international events that sort of make people a little anxious. These come and go. We can't be now sitting and fretting about these kind of things at a short-term level in any case.
So I wonder if when we are having the same conversation 12 months out, Mr. Venkataraman, would you reckon that we'll be able to say that the 5-year CAGR is very similar to the 4-year CAGR? Are the individual businesses setting up stage for you to repeat that kind of a performance or better that?
Like, Ajay was sharing yesterday, the 2.5x of jewelry means a certain, CAGR. And so we are very much running to that CAGR. FY23 was, full year was damn good from that point of view. We are resolved to keep FY24 momentum at the same rate. We're talking about a 10,000 crore MRP plan for the watches and wearables for FY26, whose CAGR is even better than that 2.5x. Taneira is dreaming of 1,000 plus crores, women's bags 1,000 plus crores, international some 3,000 plus crores. So obviously, if you put all these together, the growth rate is certainly of the order like what you described. So we are very much citing that the opportunity is there. Surely it will depend on the execution of the company, and that's in our hands. Things could, from an economic point of view, even though I don't know what exactly that could be, because India is a little bit insulated economy, So, and we are also in a business, like if I take jewelry, it's a store of value category. It's a safe haven category. So if people are anxious because of external reasons, they would also go to gold. And the market share opportunity is huge in jewelry, in wearables, in eye care, in Taneira, in perfumes, in international. So barring the analog watch business, where our market share is exceptionally high, every other business, the market share opportunity is very high. The formalizing is accelerating. The income segments where Titan depends most for its business, they're expected to explode in numbers because of the per capita GDP going to 5,000 USD. So therefore, all the enabling factors are in our favor. So it'll be an execution which, we will fail if we fail, it will be because of our execution, which we are resolved to not let that happen.
Okay. What might not work relative to FY23, as you said in the call as well, is that because the high cost or the low cost diamond inventory not being with you, that benefit will not come out in FY24. Are we looking at maintaining on the operational metrics the kind of margins that we came out in Q4 for FY24, or can they be better?
It's actually too early to talk about that. You're very much right in that particular advantage we had in FY23, not happening in FY24. But, the sale, if I talk first about the sales growth trajectory, we are resolved to keep, maintain that sales growth trajectory. And at that level of sales growth on a base of this order, the leverage, benefits are also there. So, but as always, and I keep saying this every time, that our focus remains sales growth and less margin expansion, because we are overall delivering a very high return on capital because of our asset light model to the business delivers a very high return on capital, and therefore even if the margin stays in the same place or even dilutes a little bit, the ROCE is very high. So our focus is on sales growth first and try to maintain the profit margin.
All right. And even though April was soft, hopefully a good May and a good June because of the wedding season will take care of Q1 too. So it enables you to go off to a good start, Mr. Venkataraman, I presume.
Yeah, it's just a month. And actually, we're pretty happy with the way April has turned out. Irrespective of whatever, because we've also not specifically declared any figures, but we've given you a sense that we are very, very, satisfied with it. And it's 1 out of 12 months, a lot of time to do many things to actually keep the growth rate to the level that we want.
My final question, actually two-part question, Mr. Venkataraman. As you see the start of this year, we are in May, but virtually at the start of the financial year. How is your confidence level relative to what it would have been let's say May 2022, because it was also coming out of Omicron, so maybe there was a lot more hope than confidence. Are you a lot more confident about FY24 versus what you were at the same time last year? That's part one of my question. Part two of my question, on a personal basis, something that you really wish to see Titan achieve over the course of the next 12 to 24 months. It could be any one segment's individual growth, it could be a combined piece, but something that you really want to see Titan get through on a personal level.
It's a little difficult to remember how exactly I felt in May of 2022, but frankly, I don't remember feeling any less confident then or any more, because by nature I'm a very, very positive person. So there is no difference that I can sort of recollect. Also because of the manner in which I look at it, it is finally what are all the circumstances in which the company is playing, including the customers and all that, and the formalizing opportunity, low market share, huge base of talent and committed people, the large Titan family and all that. So those conditions are long-term conditions. They don't change. And therefore, I would have been as confident 1 year back as I am today. I'm no less confident.
Okay.
If at all, more confident because we have achieved more success in 1 more year. So that's what I would say. The much bigger sort of share of international business, much bigger share of Taneira, much better position in the wearables space where, like, you ask people, so if you think of a smart wearable, which brand comes to mind? And a lot of them say Titan and Fast Track, and women are raving about Earth bags. So these are, in a way, substantive changes that I would like to see a year from now.
Cross all fingers, as they say, Mr. Venkataraman, but good show. Wish you for many more quarters of such showing and more. And thank you for talking to us today, sir.
Thank you, Neeraj. Have a great day.
Thank you. You too. And viewers, thanks for tuning into this conversation.